Largest June hog herd since 2020 and smallest breeding herd since 2015. The June 1st inventory of all hogs and pigs at 75.1 million head is up 0.5% from last quarter and 0.33% from a year ago, just above the upper range of pre-report estimates. The pattern mirrors market hog inventories with similar quarterly and annual growth, again landing just above the upper range of expectations. Meanwhile, the breeding herd is the smallest in a decade, down slightly from last quarter and about 0.5% from last year and near the bottom range of pre-report expectations. It just matches the breeding herd in June of 2016, and you have to go back another year to find a smaller one. The March through May pig crop landed just a bit above the average pre-report estimate of 1% higher than a year ago. All but the heaviest class of market hog inventories are up compared to a year ago, with the lightest two classes up just more than 1% and 0.1% respectively, but fairly in line with pre-report estimates. The 120 to 179 pound class is up nearly 0.5% compared to expectations of more than a percent decline, which is a bit of a bearish surprise for the near term. The heaviest category is down more than 0.5% as expected. Overall, the number of hogs weighing less than 180 pounds is about 0.6% larger than a year ago, which will be the market hogs arriving at processing plants from July through November. The year-over-year increase in lighter weight hogs actually reflects similar magnitude increase in the March through May pig crop. The latter results from another record 11.75 pigs per litter for the period, pushing 1.75% higher than a year ago, more than offsetting the less than 0.5% reduction to farrowings. Such productivity growth should be expected to continue given that annual growth in pigs per litter has averaged over 1% since 1994, and 8 other countries attain greater than 13 pigs per litter. Relative to actual farrowings a year ago, farrowing intentions are down less than 0.5% for the summer and up nearly 0.75% for the fall, which should imply somewhat similarly small changes in slaughter in subsequent periods. Frozen stocks of meat are tightening. According to the most recent USDA cold storage report, cold stocks of pork at the end of May are down 1% from the previous month and 7% from a year ago. Beef stocks are down 3% from the prior month and 1% from a year ago, while poultry stocks are up 2% from the prior month but down 6% from last year. The USDA forecasts U.S. per capita pork consumption at 50.3 pounds per person in 2025, rising to 50.8 pounds per person in 2026, reflecting continued uncertainty for consumer purchasing power in the face of inflation, the relative availability of beef, pork, and poultry, and declining export demand. The U.S. exported 583 million pounds of pork in April, or about 11% less than in April of 2024, possibly attributable to uncertainty regarding tariffs and terms of trade. Mexico, Japan, and South Korea were top buyers, respectively accounting for 35%, 16%, and 13% of shipments, representing 17%, 14%, and 8% declines from a year ago, while Canada cut imports of U.S. pork by a third. Competitors are gaining ground in key Asian markets. While the U.S. share of Japan's imports of pork decreased 4% for the period, Brazil's share rose 6%. Accordingly, the USDA reduced forecasted second quarter pork exports to 1.69 billion pounds, or 4.2% below last year, with forecasts for the third and fourth quarters of 2025 respectively about 1.5% and 2.5% below a year ago, bringing total pork exports for 2025 to 6.95 billion pounds, or more than 2% below 2024. In 2026, U.S. pork exports are forecast to start fractionally lower in the first quarter, but rebound throughout the remainder of the year to almost 1% above 2025. Given that feed costs are a primary component of hog production, a hog-to-corn price ratio of 20 to 1 is a historical indicator of hog profitability and cyclical changes in production. Historically, upward and downward moves in the price ratio tend to precede similar changes in farrowings and subsequent hog herds as producers expand and contract their operations in response to profitability. The hog-to-corn price ratio just rounds up to 20 for the last 2 quarters. Last Friday's closing prices for same-month hog and corn futures contracts suggest ratios exceeding 27 in July and 20 in December of 2025 and remaining above 20 in May 2026. If such levels persist, perhaps some breeding herd growth could be observed in subsequent quarterly reports. Feed costs could inch even lower if today's USDA June acreage report indicates slightly fewer corn acres, as analysts anticipate. The forecast presented here is for the national weighted average net price on a carcass basis for all transactions for producer sold barrows and gilts, including negotiated and contract prices. This net price should be more reflective of what producers receive on average and normally runs at a premium of more than $2 a hundredweight over the base price on average. From April through June, this net price averaged only $93.98 a hundredweight compared to $96.27 a hundredweight for corresponding net prices for negotiated or spot transactions, which is unsurprising at relatively high price levels, whereas contractual safeguards against lower price levels commonly reverse that relationship. As hog prices tend to be seasonally higher in the second and third quarters than in the first and fourth quarters, this price series is forecast to average $98.23 a hundredweight for the third quarter of 2025, falling to $85.38 a hundredweight by the fourth quarter, and $84.09 a hundredweight for the first quarter of 2026, before rising to $89.36 a hundredweight for the second quarter of 2026. These projections are consistent with supply and demand scenario that is currently anticipated. However, if greater production occurs or if demand softens, lower prices may be realized. Conversely, if pork exports remain more resilient than anticipated, higher prices may be observed. For the University of Illinois and the University of Missouri, I'm Jason Franken.